Welcome back to Liberty and Finance. We're delighted to have this widely followed returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us for this weekly market update live, truly live, this Tuesday, March 18th, 2025. Andy, thanks for coming back on Liberty and Finance.
Good to see you again, Don. Again, thanks for having me, my man.
Wouldn't miss it. Neither of us would if we did anything we could do about it. And I think today is a red letter day. I think we should call it Gold Y. We should call it Gold 3K Day. Why should we call
Yeah.
it Gold 3K Day?
Yeah, it's really, what the craziest part of it is to me, Don, again, is that if you would have told me that, gold was at 3,000 bucks. Let me look at the futures here real quick. And silver over 34. Let me just see what the futures are here real quick. Of course, my computer never cooperates when I'm asking it to. So the futures on silver are up to 34.63, and the futures on gold are at 3,039. If you would have told me that that'd be the case and there's virtually no mainstream media attention, I would have said there's just no way that that can be the case. I mean, my entire career, gold at 3,000, people would have said you're crazy. I remember when Jim Sinclair said gold would hit 1650, and he was called, he was looked at as being, crazy. There's no way gold could be 1650. This is when it was 400 and 500. So to see it at over 3,000, to close it over 3,000, to breach that level, and really not to see any acknowledgement of it is really shocking, especially with what's going on in London and New York.
Speaking of which, this is a big deal. You were informing me earlier today that there has been the futures for LBMA trading on on the COMEX exchange in New York has been suspended. Explain what that means.
Well, I mean, it could mean many things,
I
right? I
mean, no,
mean,
no, no. Just what, first of all, what's the definition of that
it
in
means that you
layman's
can no
terms?
longer purchase forward contracts. You can't purchase futures contracts from New York on the LBMA. And so it's drying up the liquidity in London, where they would use a lot of the banks would hedge their positions in London with forward contracts, derivatives, paper. Remember, in London right now, there's 200 roughly last week. I don't know, it's probably a little less now, but 279 million ounces of gold in London. Only 36 of that is available for delivery. The rest belongs to ETFs in the Bank of England. And that's standing behind 380 million ounces in outstanding spot contracts, 11 times nearly the number of contracts issued versus the amount of gold issued. And in silver, it's very similar. Roughly 270 million ounces of silver is all that's available of the 800 million. Now it's under 800 million, like 770, 780, because we saw 85 to 90 million ounces. That's what COMEX is on track for, to be delivered for March, of silver come into COMEX, almost all of it coming from the LBMA. And so and when you talk about 290 million ounces, and there's available, yet they're trading 2.9 billion ounces of silver. Again, a 10 times the number of contracts standing behind or the metal standing behind those contracts, 10 times the number of contracts. To me, what it really speaks of is the lack of trust in the LBMA system, that no one trusts that they'll be able to deliver anymore. And they're trying to tell us that it's a logistics thing. It's a lack of trucks and a lack of manpower. I think they're realizing that the exchanges are being bled dry. And maybe now what we see is COMEX trying to distance themselves from the LBMA. In the last 3 months, 128.5 million ounces of silver have been withdrawn from London. And so you're talking almost 50% of the float gone in the last 3 months in silver. So between the amount of silver and gold delivered, not to mention all of the others that are standing for delivery, but they're being told it's 8 weeks. It seems like they're turning up the heat. And maybe, just maybe, that rumor of Trump trying to stick it to the Bank of England is really true after all, because this is a very provocative move. And I think, it really does speak of of the LBMA losing confidence globally in its ability to deliver. And this is the beginning. So I guess we'll see what the real reason is. Much like most of the things we've seen lately on the LBMA and COMEX, we can assume and surmise what the real agenda is. Mainstream would tell you that's not the case. I don't believe it. I actually feel that we are witnessing a shift from this paper market that all of us thought would never be broken into other hubs like Shanghai, like Moscow, like Dubai. These are cash and carry exchanges where the price setting is far more realistic instead of a futures market where it's 90% paper and 10% physical. And no one ever stood for delivery. And you and I have been talking about this, and the logarithmic decay, little by little by little by little, and then bang. Are we at that point? Well, it sure feels that way when almost half of the available silver has been drained. And now they're saying it's logistics. We can't really get it over to you as fast as we would like. Uh, Demand for physical gold and silver is rising. And this is a move away from the Western markets. It's a big deal. We'll see how big it is. But yeah, I think this is something people really need to pay attention to, on top of the fact that it just continues to move higher. It seems almost every day now.
Are we still seeing the arbitrage that had existed between the Western exchanges versus the Eastern physical exchanges that had happened, that expressed itself quite prominently about a year ago, right?
Yeah, it's not as bad as it was. In gold, it was up to $84 an ounce at one point. Silver, certainly it was bigger, but if you look like, for example, right now in China, as an example, when you talk about arbitrage, silver today was at 30, last night was at $35 an ounce in spot in Shanghai. So there is arbitrage around the globe, but not as significant as it was a few weeks ago, because it's becoming too difficult to get it there. So I think that arbitrage, which would necessitate some form of expediency in getting the metal sent this way, when you're talking 8 weeks delay,
Hmm.
makes that cost or that extra vig probably not really worth the effort. But now that these contracts are being stopped, I think that this is something that is going to start to perhaps put great strain on the physical market, perhaps could put a run on the LBMA and really start to shift price setting and global awareness to other exchanges, in particular Shanghai, Dubai, Moscow. We've talked about this. Now, is this the beginning of that? Well, it sure looks like it could be. But the United States is now prioritizing delivery over paper, which is something wholly, completely different. Almost all the gold that has come over the 25 million ounces or so, almost all of it has already been delivered. So if this delivery continues, you'll see strains on COMEX as well. All I can tell you is that whatever is happening in London, it's the beginning of the possibility of an existential event for some of these banks that are massively short if they get copious amounts of delivery requests, 10 times the amount, 11 times the amount of paper versus gold. That's a situation I certainly wouldn't want to be involved in if I was a board member of one of these commercial banks.
So I'm still trying to get my arms around this COMEX delisting LBMA futures. Um, the COMEX previously had allowed people to take future positions at London in New York. Is that the idea?
That's exactly correct.
So
That's
it sounds
exactly
like
right.
a vote of no confidence from the COMEX about the LBMA,
Absolutely.
while the LBMA has been saying
That's
nothing to.
exactly what it sounds like to me.
Okay,
That they
so
don't believe that they will be able to deliver what they said they would. And that's not a good thing. So yeah, and a lot of the banks who would hedge their positions would do so with unallocated contracts in London. So, you take these massive short positions and then try to hedge it with unallocated positions in London. That's not a good thing. It's going to, in my mind, start to really emphasize physical markets versus futures markets. And that's something that none of us would thought would have ever happened. Now, I guess we'll find out. But it's not just the United States. I mean, we've seen in India in January and February, 44 million ounces of silver delivered to India on top of all the silver they've been buying over the last 4 years. So, we're seeing China buy massive amounts of gold as well, and that's been well documented. China has purchased, what have they purchased? Let's see. I think I have that number. Central banks have purchased almost 1,200 tons in 2024 alone. So I don't have the exact numbers that China has purchased, but it's an awful lot. And look, the bottom line is that physical demand, de-dollarization, alternative exchanges, these things are all happening in real time and all at the expense of the LBMA. And it appears as though, I mean, if you take a step back and you look at it, they throw out the idea of tariffs, which really don't seem what it is to me, and which allowed for all of these exchanges of for physical with fungible COMEX contracts into London, and the metal was flowing. And then I think they're starting to realize that this is deeper. So then they come out and say, well, it's not a T+1 anymore, it's T+8 weeks. This is a big deal. And it's a big deal because the banks that have been suppressing the price forever may just have lost the ability to do so easily anymore because they're not going to be able to offset these positions in London with massive unallocated positions when you have all these entities standing for delivery. People's Bank of China has added 600 tons of gold in 2024 that we know of, probably a whole lot more, not to mention what they purchased. But this heavily unallocated paper gold to physical ratio market is breaking. And when you realize HSBC, Scotiabank, JP Morgan, they depend on these derivatives and this unallocated gold to hedge their positions. They're not going to be able to take these massive naked positions anymore, these positions that have allowed them unabated to manipulate the market because, as I've surmised for a long time, there are entities starting with the BRICS and now the United States that are getting wise, I think, to just how important physical is in a game that's rigged. When you see Jeffrey Gundlach come out, the bond king, saying, $4,000 gold is easy and in the cards, you're beginning to see a lot of big name people understand exactly what's happening. And $3,000 gold, if we see these trends continue, will be a distant memory. And I don't really talk that way, but it just seems as though these are the kind of things that could certainly push gold a whole hell of a lot higher. No question about it.
In the past, you've clarified for people the slippery wording of the like SLV or GLD prospectuses, the way they're worded, that they're not really committing to keep up pace with the price of gold, that they certainly aren't guaranteeing that anybody's going to be able to take physical possession, et cetera, et cetera. There's a question here. Matthew Belanger Camden says, will the COMEX delisting of the LBMA futures affect GLD? So, is there anything that you recall from the prospectus learning that you did about those ETF funds, such as GLD and SLV, that we think might be impacted by this delisting of LBMA futures on COMEX?
Well, I find it interesting that JP Morgan has taken over almost entirely full custodianship of GLD.
Hmm.
I think that in and of itself is somewhat nefarious. It was always HSBC Bank. I believe HSBC Bank only holds about 2 million ounces of the entire stock of GLD. Yeah, I mean, you could see the price of GLD go much higher just following the price of gold, but that's not the way to own it. It just isn't. And when people have asked me, do you think gold will be confiscated? I've said it forever. I think they'll take the ETF. So if we are indeed trying to reshore all of this gold and you put, in essence, the agent of the US government, that being JP Morgan, in charge of the largest stockpile of silver in the world and one of the largest of gold, and none of us can take possession, it just seems like it would be easy if they make this switch instead of confiscating physical gold, activating eminent domain to disclose those funds and give it to the U.S. government. Held by, JP Morgan's holding more gold in their two vaults, one in London, one in New York, than the majority of the G20 countries. So to me, I get nervous when I think about GLD and SLV as a tool to siphon a lot of that gold and to confiscate it and add it to the stockpiles. And if they really are trying to revalue gold, I did a little exercise the other night. I took the total US money supply and took 40% of it. And the reason it's 40 is that, look, the United States was on a 40% gold back. It used to be 100%. And then somewhere in the 50s, they passed a law that made it 40% until 71. When Switzerland had gold backing, it was 40%. When the BRICS just proposed their new unit settlement token, it's 40%. Jim Rickards was talking 40%. So I took the money supply, 40% of it, the total money supply, and divided into the amount of gold, or divided the amount of gold into it that we supposedly hold that hasn't been audited since 53. And it came out to over $12,000 an ounce. Now, could that happen? Yeah, why not? I mean, you're still talking 20%, nearly a little under of what Bitcoin got to. So why not have gold at 12,000, which would give the Treasury general account 3 trillion free and clear? They would just issue new gold certificates to the Federal Reserve, which, by the way, Federal Reserve does not have claim on any of that gold. There's confusion. People think that they do. They don't. The certificates that the Treasury more or less sells to the Federal Reserve or gives to the Federal Reserve as collateral for the money that goes into the Treasury general account is more or less guarantee on fiat currency. It's not the actual gold, which does belong to the Treasury. But if they revalue it to $12,000, giving it in essence a 40% gold backing, in line with where you would probably have to put it to do what Judy Shelton wants to do with backing the treasuries, collaring them and redeeming them in 50 years for gold, the first thing you would do is reshore it quietly so as to not let everyone know what you're doing, to allow the banks in the West to clean up their balance sheet in London, especially. And then you would slowly turn up the heat, get as much of it as you can, let the price rise, let JP Morgan control both GLD and SLV. I mean, you can see the pieces are in place for if they wanted to do this, they really could. And the rumor is that he's very angry at the European aristocrats. He believes they're behind the color revolution we've experienced here in the West. He believes they're behind any election integrity issues. That's the rumor, and that he's trying to blow up these European banks who are in big trouble with massive, massive, massive short positions, unallocated, in an environment where they've set off the delivery binge on top of what the BRICS have quietly been doing. And if we see an acceleration, yeah, I mean, all manipulations always eventually end in spectacular fashion. Could this be what we are seeing? I hesitate to say it because I feel like the little boy who cries wolf, but it feels that way. And it feels like it's being set up to where they could do that. I guess we'll see. But at this point, then again, we're so far indebted and have done so much to destabilize not only the monetary side of things, but actually our national security as it pertains to the future with our issues with indebtedness, with lack of treasury demand. Since since 2014, no one's bought any treasuries. No central bank has. Sure, they bought some, but the amount of selling by treasuries has outpaced the buying since 2014. And in that environment, how do you establish confidence and credibility? Well, you do what Judy says. You issue 50-year treasuries backed by gold. You bring all that gold home. You get the banks here in the West out of trouble and let the price rise. Could that be what we're seeing? Yeah, maybe. And you're not going to get anyone to take our treasuries as is just by promising. And here, they're trying to lower rates again. The economy is slowing down. I just think that this is a situation where they realize this is a necessary step. Seems like that's what they're doing.
Along the way, we've been noticing for the moment, even though all of this physical off-taking, physical delivery off of the exchanges, the stockpiles of what's eligible for being able to be taken off is dwindling on the exchanges. We've been seeing at the retail level remarkably quiet premiums, for example. In fact, lower premiums, I would say closer grouped premiums between the higher and lower end than we've seen in a long time. There's a question from Scott Woodward on the live chat. Question for Andy, is now a good time to convert Buffalo rounds into pre-65 silver coins? I assume he means if you want to take advantage of legal tender status, U.S. Mint lineage, sub-ounce fractional size for barterability, etc.
Yeah, why not? Everything has come down. The ask price on pre-65 silver is as low as I've ever seen it in reality. And so, during the pandemic, the premium on pre-65 silver was off the charts. It was higher than everything but Silver Eagles. Um, Part of me believes that there will be an awakening by the public. I mean, the fact that we haven't seen it yet is astounding to me.
Hmm.
The fact that we've gone to such a culture of greed where, 30, 40% rise in gold is not sexy enough, where at 9.9% per year for 25 years is not sexy enough. The fact that, the central banks have been buying it hand over fist is not sexy enough. The fact that we are now a net importer is not sexy enough. And it's not Bitcoin, it's not Nvidia, it's not Apple, it's not risk on. But quietly, the tortoise seems to be pulling out ahead in the race. And yeah, there'll be an awakening at some point, and you'll see premiums on things like junk silver go straight to the moon again, simply because it can't be reproduced. But when you start to see things like we're seeing, where exchanges are being bled dry of their 1,000-ounce bars, and
Hmm.
central banks are being told 8-week delivery delay, and 145% of the London float delivered in the last 3 months, these things are getting real. And I've never seen anything even remotely close to this. And it's hard trying to take this information and discern what is really happening. And I don't profess to really know, but simply to take all of the pieces and put them together and say, yeah, this could actually be what they are doing. And I've been talking about this now for a few weeks, and it keeps happening. More and more things are happening that would say, geez, that's supporting that argument quite nicely. So, Dunnigan, yes, I think that silver certainly, look, we're right at 35, almost there. We're just a little bit below 35 on the futures. You get above 35, there's virtually nothing there to stop it between it and 45, and then the sky's the limit. Now, is that going to happen? Well, every time, when Rick Rule comes on, and I've said it a million times too, we haven't been really right yet, but it was in the past, and that is gold really leads the way, silver languishes, but then on a percentage basis, slingshots. Well, silver has been acting quite nicely the last few days. Could it bust through this resistance level? You see how much silver is being exported out of London and imported into India and the United States and China and now Russia. We talked about China buying all the doré and the concentrate. They're the second largest producer in the world. Why? There's an understanding by the knowledgeable central bank investor, the most knowledgeable investors in the world, just what silver and gold represent. And that understanding has been whitewashed from the United States investment vernacular. And that's why so few people will benefit from this. And why the people listening to you and I, some of them must say, shit, I hear this all the time. It's getting tiring already. But I mean, it's been evident to me that this is a trend since 2020, when I said all of a sudden the exchanges are being delivered on. No one ever did that before. And it's been a gradual process. And this new administration, I think, came to Trump and said, here's what's happening. And you better do something about it, because the world is standing up against the paper derivative market to their advantage. And we're going to be left in the cold with an inability to source these commodities if we wait much longer. And that's why I think they've done it under the guise of tariffs, done it with virtually no fanfare. And that's maybe why Scott Bessent backtracked from saying he's going to remonetize the assets. Everyone thought it was gold. Maybe Trump said, you dummy, what do you do that for? You don't want to cause attention to it. So, uh, Cynthia Loomis did the same thing. In her bill, she advocated for revaluing gold. And then in another bill, she said we should sell the gold. So it's almost like, or another interview, she said we should sell the gold. It's like they're backtracking. Maybe they were premature in making these declarations, but I don't know. Something in my gut tells me that this is moving in a direction that is going to reintroduce gold in particular into some form of a new monetary system, or at least backing US treasuries. And as far as silver, look, there's a 90% correlation throughout all of history between the two, and it's a strategic metal. And I think that's been realized as well. And when Scott Bessent, say what you want about him, but when he was running a hedge fund, his largest holding was gold. He understands it. And evidently other people do in the administration. So yeah, I think this is legit. I really do.
It's interesting when you watch the body language versus the words that are being said, because what we're hearing is Trump, talking about, I'm the Bitcoin president, and RFK is talking about Bitcoin, and they're talking about strategic Bitcoin reserves and all this stuff. And yet all this gold's moving from London to New York and going somewhere. in a big hurry. So it's rather interesting, wondering what actually who is really doing the off taking. We have a question here from Andy Race. Oh, by the way, folks, we're going to have Judy Shelton, whom Andy just mentioned. Dr. Judy Shelton was a former member of Trump's first administration team, economic advisor, and she narrowly missed being selected as a Fed uh, appointee this time in the Trump cabinet. But the she's going to be back here 2 days from now for an interview. So if I'll be posting call for questions for her if you want to get those questions in front of her. There's a question here from Andy Grace. I think it's a fair one. Why would anyone buy a Judy Shelton 50-year gold bond with effectively no yield instead of just buying the physical metal and getting it right now rather than when I'm dead? There are, Andy, as is it a potential partial answer to this is that there are entities who are restricted that they have to buy regulated securities or whatever, and U.S. government bonds qualify for that, whereas physical metal may not.
Yeah, that's true. That's a fair point. In her book, she does talk about issuing shorter duration treasuries as well. Um, I guess it's a fair question. Why not just buy the real thing? I would suppose it has something to do with just that, U.S. treasuries are tier one, and gold is tier one. So, maybe it's easier to do it that way if all of a sudden gold becomes very difficult to obtain in those large quantities. Maybe it's easier to buy U.S. treasuries, which are probably more fungible, easier traded. She also did say that her desire was to see stable coins issued off of the treasury bonds as well, which again would facilitate the treasury market, just like they're doing right now through Tether and USDC and the stable coin issued through what's it called, XRP or Ripple Labs. So they're all backed by U.S. Treasuries. So um, it's a fair question. I would assume it has something to do with the tier one status and regulated status for like insurance companies or for pension funds or those kinds of things. So maybe they put a lower coupon on it, not a 0%, but maybe a diminished coupon. And she does talk about issuing shorter duration as well. So I'm sure there's something behind it. I'm not an expert in the treasury market, but it is a fair point. I would rather own the real thing than a treasury tied to it, but I'm sure that's not always an option for some of these entities.
Brian Callahan raises a commonly asked question from many of our clients who call in. Says, does anybody notice the online dealer spot price is always $6 to $10 higher than Kitco? Uh, we there's two things at least that need to be talked about there. One is that every dealer has to come up with their own formula for calculating spot because there are multiple markets they're trying to blend. Second, that there's always the bid versus ask confusion that's always a spread, just as there is in the stock markets, et cetera. Can you tackle that one? Why it may be that the easiest charts to find on Kitco often show uh, lower than most other dealers show for spot?
Yeah, let me take a look real quick and see what the differences between. I do know that theirs is typically lower than everyone's, and maybe it's because it's delayed. I will tell you that of all, right now, if you go to All Metals Quotes on their page, the ask price is 3,033.80. And let me look on my website real quick. Ours is 3,038. So, but if you look at every other one, ours is lower than all of them. Every one, we're lower than JM, we're lower than Atmex, we're lower than Money Metals, we're lower than SD. These are all fine companies. And you're right, that each company does have to come up with their own kind of the special sauce. It's the switch between the active futures contract and it should be just a little bit. I don't know why Kitco's is always lower than everybody's. They are. And maybe it's a delayed quote. I'm not sure. But if you compare ours to every other one out there that I just mentioned, let's look, for example. So right now, Miles Franklin is, not that it really matters, we're at 3,038. So we'll look at some very reputable companies. SD Bullion, very reputable. They're at 3,042.90. We look at JM Bullion, very reputable. They're at 3,047.48. We look at AppMex, very reputable. They're at 3,051.30. We look at Money Metals, very, very reputable. They are at 3,044.70. I mean, you keep going on. Ours will be lower than everyone's except Kitco. And I don't know why they do that. The only thing is maybe they're delayed 10 minutes or so. Not quite sure, but against all the other major retailers, you could argue, and I'm not saying it's not true. Maybe they're padding that price and making a few dollars on every ounce they sell. Is it theoretically possible? Sure. Could it just be that the way that they use or they hedge and do things, it's different? Sure. So not exactly sure, but spot price is always gonna should always be within just a few dollars. A few of these companies, it's a little high. I'm surprised. Amex is a little high, but compared to everyone else, but they're one of the biggest companies in North America, so they're doing something right. I don't mean to hide from the question. It's just that there is no definitive answer when you're trying to get a current spot price and taking the time delay off of the most active futures month. Um, it's a little bit of special sauce, so to speak. But I'm happy where we are. Certainly, of all the majors, we're either well, other than Kitco, we're the lowest. So that's definitely something that I'm proud of. We're not
Another
we're
thing
not
that
making more than we should. I'll put it to you that way.
Yeah, that's for sure. Another thing that causes some confusion among clients is the different approaches that different dealers take to putting prices on current mintage year coins versus older mintage year coins. But also there can be between different products as well. Heidi Joe says, I see on some rather large gold companies' websites that they're buying back sovereign coins like Philharmonics for less than rounds. Why would that be?
Doesn't make sense to me at all. And more often than not, there are some backdates that are worth a little bit more. But I just sold a client just the other day. He bought 10,000 10,000 ounces of Silver Eagles, backdates, which were less money than the current dates. And they were all sealed boxes. Five of the boxes were 2021 San Francisco mint. You go look, I sold them at the backdate price. You go look at what anyone is selling 2021 San Francisco mint coins for. And if you're listening, sir, you know who you are. I told him, I said, most companies will be selling these for a lot more. In fact, let's just look at one company and see S Mint Silver Eagles. Let's see if what it looks like, if anyone has any. So yeah, so I mean the 2021's on, and there it doesn't say San Francisco, it just says type one, which these were as low as $43.15. Let me just look at one more and see if someone has the 2021 San Francisco Mint Silver Eagle. So it is a way. Here we go. Let me just see what it says real quick. So they have them for San Francisco. Oh, they don't have any. Oh, here we go. 2021 San Francisco Mint SD is at 28,561. Uh, That's $57 a coin.
Right.
And I sold them at the same price, as God is my witness. To me,
Same price
and I'm
as
not going to
common
speak
years,
more
yeah.
because these are all great companies. I
Yeah,
don't have a
sure.
bad word to say about them. Maybe I'm stupid. Maybe I should sell them for more money. Everyone else does. It's always been my belief that that's not the case. So maybe I'm behind the times. Look, I people give me a hard time for not posting my prices, but maybe this is one of the reasons I don't. I'm able to do these things, and um, to me, there are some rare dates, 1996 Silver Eagle as an example, but most of the backdate coins should be less, in my opinion. And I will always sell them that way unless it's a truly special rare date. But this is, if SD, one of the biggest, best companies in America, is at 57, was I stupid to sell them at, a $4.79 or whatever premium? I don't know. I felt good about giving the guy a good deal. So it should not be most of the case, in my opinion, but maybe I'm missing something. Maybe I'm just not the best businessman in that respect, maximizing how much I can make. I mean, I don't know how else to answer it. That's as honest as I can be.
We have a question here from Red Rocks Media says Andy indicated GLD could be confiscated. What about private depositories? I'm concerned they'll be confiscated too. Doesn't that make sense?
Yeah, it does, but not as much to me. I mean, um, GLD and SLV are held by JP Morgan. And, JP Morgan, who paid a $920 million fine for manipulating the market and still allowed to run SLV at the time, the largest silver trust, their desk made $1 billion that year and they paid a $920 million fine. So they make 80 million, get slapped on the wrist, and still control these ETFs, now controlling GLD. To me, it's much easier to take the metal held in GLD and SLV, the delineation being that, well, you can't take possession of GLD and SLV. You can take possession out of the depositories. If you wanted to really take a stretch, I guess you could say the IRAs would be easier to take than just physical metal held at Brinks. But even still, you're allowed to distribute that metal. It would send the wrong signal. It just seems it would be so much easier and cleaner and not breaking any laws or violating civil liberties to take GLD and SLV. You can't take it anyway. So desperate governments do desperate things. I get it. Um, you can't prepare for every eventuality, but I would be much more concerned owning an asset that tracks the price that you can't ever take possession of versus owning the real thing in a depository, which in essence is a contract between you and the entity. So could they do it? Sure. It's lower on my concern list by a long shot, though.
And our team, Liberty and Finance, we've been advertising a swap opportunity because the premiums are so low on junk silver relative to bars compared to normal that we can help people very economically get out of bars or rounds and into junk silver if they want to. Some of the reasons that come to mind when we talk with clients in that, and you may have more, I'll just throw out some of the ones that we talk about are you get out of something that is definitely reportable when you go to sell it back in quantities of 1,000 ounces or more, that's bars and rounds, into something that's uh, not no longer seems to be in the reportables category. You get out of something that's not U.S. mint lineage, but just private mint lineage in most cases into something that's A, government minted and B, is made in USA. You get sub ounce, so fractional sizes, which is much more high utility for potential bartering, emergency coinage usage. Um, and also something that's high liquidity. And we've seen, uh, as you mentioned, during the COVID crunch, when we had the we had the COVID crash, we had the Ukraine invasion, we had the bank failures, and the premiums on junk silver shot up to over $10 per ounce. So, any other thoughts from you and how people might want to think about that opportunity that is presenting itself with these low premiums on junk silver? It's not a one for one trade. It's not ounce for ounce, but there's only about a 5 or 6% loss in ounces if you go cashless for a swap from bars and rounds into junk silver ounces at the moment. As far as
Yeah, I mean,
it goes,
I think there's a lot to be said for owning the American-made coins. The flexibility is second to none. And if knock that off, and if we see premiums even approach half of what they were during the pandemic, and I can't see why we wouldn't. I mean, this to me tells me we're on the heels of something very big in gold and silver. Really do. And um, if stuff is disappearing at the highest level, how fast before that trickles down into this level? I mean, after all, the coins come from the big bars. The big bars come off of the COMEX typically. The U.S. Mint will take delivery of contracts and send them to Sunshine Mint for refining into planchets, and then they send them to the U.S. Mint for stamping. So, um, could that translate into much higher premiums on everything across the board? Yeah. And if things get to where they were, or anywhere even close to it during the pandemic, awareness wise, yeah, I think it is the time to do it because nothing corrected downward from its previous peak the way that junk silver did. 11, 12, 13, $14 over the price of silver nationwide for 2, 3 years. And now it's under $2 over spot. I mean, it is a steal. I would argue that if people had a lot of silver bars, those are really the only things that trigger dealer reporting anymore on sellback. So if you do more than 1,000 ounces at a time, so over time you could do that. You could trade 5, 6, 7, 8, 900 ounces at a time. Doesn't mean you're not supposed to do the reporting. It just means that we are not required to do dealer reporting. Junk silver used to be on that list of reporting in excess of 1,000 face when you sell it, $1,000 face value. But they got rid of that because it cannot be used to settle a COMEX contract. It's just bars. So to me, if you own bars and you want to get something far more flexible, do it over time. If you do it all at once over 1,000 ounces, you will need to provide a social. But you could do several transactions over a period of time. You don't want to call us up and say, I got 50 bars and I'm not going to file. You could just say, hey, I got 7 bars. I'd like to switch to junk. Or maybe if you do 8 bars, which is 800 ounces, you can get a full bag, 1,000 face. Be real close to that, I would bet. Real close to it. And you do that a few times, you pare down your bars, you move into junk silver, which has better upside potential, which is way more flexible. And there's no dealer reporting. Some people don't like that dealer reporting. Doesn't mean you're not supposed to let uncle know when you sell anything and make a profit. But just to cite the law says anytime you trade more than 1,000 in bars, we need your social. So to me, bars are even better than rounds because the rounds have that utility. The bars, that's the one knock against them is they lack the utility, especially as silver goes higher.
We have a question here. I remember some of the footage that I shot when I was visiting our bullion operations in Fargo. And we have multiple bullion operations, but that was the one that we were visiting that day. We saw some of melt and pour of both gold and silver going on. There's a question here that says, this is from Anonymous. Andy, are any of the big dealers sending 90% junk off to be melted into bars?
I don't think so. Not now, no. Um, I will tell you there was a period of time which I can't even believe. We did the numismatic swap recently, which was such a good deal. I mean, we sold 11,000 ounces pretty quick. I'm happy that there were both of our clients were able to take advantage of that. But I do know that some dealers were actually melting $20 gold pieces down during that period of time, like halfway through last year, up through the first quarter, the beginnings of the first quarter this year, during the Trump euphoria, during the Nvidia risk on Bitcoin trade, where people were selling gold, and then the dealers had to come up with tens of millions of dollars to buy the 2025 allocation. So we've talked about that, where at the beginning of the year, we have to spend, tens of millions of dollars to buy all the new 2025's gold, silver, and platinum for Canada, Australia, Austria, South Africa, US, and UK in all different sizes. And that costs a tremendous amount of money. So they were melting those down and to come up with credit, sell at refiners because they were just sitting there, which is crazy, and it's really interesting the way the retail market has a lag behind the big traders up on top. I'm very, very confident that we will see things dry up very quickly. Um, it goes, that's how it always goes. And when you see such a huge drive to accumulate COMEX bars and LBMA bars and now 8-week delivery delays and all sorts of rumors and innuendo, it's just a matter of time before that finds its way down into the retail space and a market that I still think for the music stops will be defined by inability to readily source cheap product. But no, I don't think they're doing that quite yet. I mean, I guess you could say it's not a horrible idea because, you know, um, there was a point a few months ago where our cost was a little bit below spot, and then sell it to the public for next to nothing. But that was kind of indicative of it, not having any demand at all. So it's not entirely possible. We haven't done it, I'll tell you that much.
Okay. I'm going to share a screen here just for what we do have readily available here. Hold on. These are our weekly specials. I think it's the same as last week's. First of all, you've got you can read that out so people listening on the podcast might need to hear you tell what these are, because if you just say that that's a good one, they won't know if they're listening audio only.
Yeah, and so that's the pre-65 dimes and quarters junk silver at $1.99 over spot. And there are times I'm just going to say, on larger orders, we can even sharpen our pencil better in that. And we're always trying to give people the best deal. And on a large swap, sometimes we'll do that. But $1.99 over spot on pre-65 dimes and quarters is as good of a deal as you'll find anywhere.
And there's the halves.
Yeah, 2.25 over spot for the halves. I like the dimes and the quarters better because the halves were the same price not too long ago, but for 26 cents, it's usually a lot more. The halves are made in much were made in far less quantity than the dimes and the quarters, so they are more scarce. And so I guess for 26 cents, which equates to next to nothing on a bag, it's still a pretty darn good deal.
And
The kilo bars, the Valcambi. There was a period of time not too long ago where we couldn't even get these. They dried up so much. But if you're buying bars, I like the kilo bar maybe the best. It's size of an iPhone, come in boxes of 15 with serial numbers. They're really crisp like this. They're really awesome bars. If you're going to buy bars, these still offer a modicum of liquidity instead of being 100-ounce bar or a piece that really is not super liquid for anything transactional. This is certainly a third that amount or the third of that size and easy to carry around, make amazing gifts. I like them. If you're going to buy bars, this would be my choice.
and least expensive gold coin,
I've
sovereign
sold a
coin.
lot of these lately. I don't know how many we have left. I've told everyone if you're buying bullion, I mean, there was a period of time not too long ago where these were more expensive than gold eagles, and I don't know why that was. But at 59 over, that's as cheap as I've seen a modern minted bullion coin in like forever. So I've sold a lot of these lately, and while it's not my favorite coin, I like the eagle better. You're going to pay over $60 more for a gold eagle over this coin. Is that worth it? To some it is, and but for straight up gold play, this is as good as it gets.
Let's see if we got any more questions. And again, thank you for Andy for making yourself available here because you're gonna be
I'm
traveling.
so sorry my schedule has been so goofy over the last several weeks with travel and commitments. I really do appreciate you bending a little bit for me. It means a lot. I do
It keeps us
appreciate
all
it.
on our toes. And
So, Nate Green there, who has 30 100-ounce bars that he wish he didn't have, that's a perfect example. Trade 9 at a time or trade all 30. Hey, we need your social. You trade 9 at a time over a period of time, and each time you'll get over 1,000 face, a little bit more maybe. Maybe get 1,000 face in dimes and quarters, and the rest in half dollars or whatever 1-ounce rounds. But you could do that 3 times, 4 times over a month period or over a couple of weeks or whatever you want. Legally, you still have to report it on your own, but now you get the junk silver back in your possession and we can help you send it back with FedEx air bills and the whole 9 yards. But it's never going to be easier to do that. So if you're going to do it, now is the time when the junk silver premiums are as low as they are. The availability is good because usually the first things that disappear are the smaller units, and then it works its way up to the larger bars if things were to get crazy.
Brian Callahan asked regarding the methods that are used for managing the individual coins in very large numbers, such as in the dimes and quarters. At what price do they start weighing 90% silver instead of face value when you sell?
We run everything through coin counters, but I feel sorry for this kid. He puts on a jeweler's loop and he goes through all the coins one by one by one by one to do the best he can to pull out anything that may have found its way into the bag. Um, erroneously, like, a coin it's too new and it doesn't have the silver content. So we actually go through all of those, but they're always first run through a coin counter so that we know that we have the right amount. And weighing really isn't even part of the equation as much as is coin counter.
On anything else, Andy, we've had so many people ask questions in between our interviews, and I sometimes I try my best to remember what they were between them. One of the questions that people had is, can you clarify Miles Franklin's corporate headquarters is in Minnesota, but their bullion operations are in North Dakota and Florida. Your residence is in Florida. People just want to know, where's Miles Franklin? Where does Miles
So our
live?
corporate office is, someone says Morgan's, by the way, my favorite coin of all, the silver Morgan. Uh, our corporate office is in Minnesota. That's where I grew up. I lived for my whole life, 50 plus years. And um, my oldest friend, Joel, asked me about 15 years ago for personal reasons if he wanted to move to Florida and asked if he would mind if we open up a satellite office in Delray Beach, which we did. My warehouse, I partnered with guys that are pretty much family to me, and we have business relationships on many levels. 35 years ago in North Dakota. And so our vaulting system is in North Dakota. Our corporate office is in an office building. Our office in Delray is a very small office. It's more for paperwork and it's not where our metal is held. We do have a facility in Boca as well, which is right next door to Delray Beach. But in essence, our offices are not where we keep or warehouse our metal. So yes, we do have in essence four locations, you could say, in terms of administrative, it's in Delray and in Wayzata, Minnesota. And in terms of operations, actual physical metal operations, it's in North Dakota, which is our primary hub, and in Boca Raton, Florida, which is our second hub. Uh, my little puppy, anything that moves, he wants to say hello. So I'm sorry she keeps interrupting. Anyways, but we're a Minnesota corporation, and we've had a satellite office here in Delray for going on 16 years, and it's because of the bonding and the licensing that we left everything in Minnesota. Now they're taking a little bit of a break on the licensing while the legality of it is being challenged. We still are bonded, and so we left it there because it holds us to a higher standard.
Mhm.
So will we keep it there? I guess only time will tell. If they did not mandate the licensing, if they say it's no longer necessary, I may move it to Florida entirely, leaving my primary logistics operation still in North Dakota. But our Florida hub is getting more and more integrated into our day-by-day operations.
People are making comments about that they would like to have their storage in the same state where they live, which makes a lot of sense in some ways. Um, just clarifying that Miles Franklin can ship to any vault, so it's up to you to pick your vault, and we're happy to ship there as your dealer. There's other questions that people have asked about whether we can work with any different custodian companies for IRAs. Again, we generally can work with any custodian and we can ship to any vault. So if you want to hold your metal, we ship it to your home. That's what about 90 plus 95% of our clients ask is to ship it to their home. Some people actually don't like residential delivery to their actual residence. They would prefer to have us ship it to a like a FedEx ship center in their zip code, and then they'll go in and pick it up. Two reasons. One is it gives you a little bit of privacy distance from, heavy boxes arriving at your doorstep, even though they're blank labeled or with some industrial label that has a plausible explanation. Some people just prefer not to have that showing up at their home. Secondly, it gives you some wiggle room if you work outside the home or if you travel or whatever, because it gives you 5 business days at your schedule to get in there and pick up your boxes rather than having to basically feel like you're waiting for them at home. So,
Yeah,
um,
we work with all the custodians. But I'll just take this time to say if anyone has dealt with a custodian that has tried to sell you quarter ounce for an IRA, the metals company that recommends the custodian, that tries to sell you quarter ounce gold coins for between 900 and 1200 and silver, 1 ounce to 2 ounce silver coins between 60 and 150. You need to let us know. We'll help you. You've been taken advantage of. It's becoming so awful. I was speaking at a conference in Ottawa this week, and I made a comment like this. I must have had 50 people come up to me, half of them in tears, some of them fighting with their spouses, and I can't believe you did this. This is, I mean, it's truly nightmarish. These predatory IRA companies. So the
Mhm.
custodian is irrelevant. The custodian is just a paper pusher, like New Direction, like Fidelity, like Equity, like Entrust, like American Church Trust, or I think they actually changed their name to well, it doesn't matter. The custodian is irrelevant. It's the gold company, and the ones that entirely focus on IRAs, just stay the hell away from them. They're really, really, really bad. And the things that I am seeing, I was looking at. I wonder if I still have it here. I might have it here. Here's an example. I'll just tell you one of the things they bought with gold at $1,825 an ounce on June 28th, 2022. This person was sold quarter ounce gold Canadian buffaloes. Now, I've been doing this for 35 years. I have no idea what the hell a quarter ounce Canadian buffalo is. I've never seen it. Right. And I buy millions and millions and millions and millions of dollars from the Royal Canadian Mint, have 3 storage facilities in Canada. I could call the RCM and have a first name rep agent. Our partner in Canada is one of the 2 primary Royal Canadian Mint distributors. I have no idea what a quarter ounce Canadian buffalo is, but they were sold for $639 a piece with $1,825 gold. So what's that? 639 times 4 is 2556 minus 1825. They were sold at a $730 per ounce premium. I mean, that's just unbelievable to me. That's a 40% premium. And this is the kind of stuff that we're seeing over and over and over and over again. It's even worse when you look at with silver at $20.96, 1.25 ounce silver rose crown guinea. What the hell is that? I have no idea. They paid $40.26 a piece for it with $20 silver. Or, 1 ounce Malta Europa the Bull. What the hell is that? $30.78 with 2095 spot. These people are predatory, flat out predatory. And if you try and find out what any dealer in America will pay for that stuff, no one wants it. So they're going to bid melt or 99% of melt. So if you've been caught into this trap, reach out to Dunnigan or myself, and we will tell you what to do. We will help you best we can. This is something that's not going away, and these companies need to be put out of business. And I wish I could mention their names. I really do. I can't. I won't. But these are the products they're selling. Those of you that have had any exposure with these companies, you'll know. You'll know when you hear that, because every single one of them does the same thing, which is the weird part. Tells me that there was some big company that sprang all of these other criminal companies off, and every one of them has a public spokesman that's being paid copious amounts of money to steal from you. That spokesman, they don't know. They're not privy to how they're operating. They just get a nice big monthly paycheck and probably told they can buy gold at cost, and they aren't paying attention to the devastation these companies are doing. So I'm going to take as much opportunity as I can to mention this, and maybe one of these chicken, what companies, their CEOs will have the nerve to come and try and debate this with me openly on your show or my show, on any show. I'd love to hear their justification for doing this, because it's flat out criminal as far as I'm concerned.
Andy, we're going to need to wrap there,
No,
and I'm
Dunnigan,
so
I need a
grateful.
friend. Come on.
We love that. We all value this time together. We have 1,500 people together with us right now. We've had a total of 5,500 views over this 1 hour we've been together. Folks, if you don't want to miss a single episode with Andy or any of our other guests, make sure you're on our free mailing list here at Liberty and Finance. Just go to libertyandfinance.com, Liberty and Finance, all spelled out, all one word, .com. Put in your email address, click submit. Make sure you confirm on the confirming email. We keep it private. We don't share that mail list with anybody, but you'll get a free email in your inbox once per day with our latest interviews. All of Andy's will be in there, and any of our weekly specials will be in there, so you won't miss a thing.
Hey,
And
great Nate. If you're anywhere near the southern Florida area, you're near Delray Beach, you send me an email and I will play golf with you. I'd never turn down an opportunity to play golf with someone. It's my passion. So would love to do
the
it.
trick is finding Andy in the country.
Yeah, I'm going next week. My daughter is spending 5 months studying abroad in Barcelona. So heading out to visit her with my wife and daughter, and my son will come here and watch the dogs and hold down the fort. So um, I told you I'm going to try and do some stuff with you from abroad. Maybe even do it like remote, maybe from the Colosseum or something fun like that in Italy when we go there. But um, I do enjoy these shows. I love your guests or your what are they called? The people watching the show, I
Yeah.
guess,
Yeah,
the
our
viewers
subscribers and
are
viewers,
all
yeah.
so great. They're all so respectful and nice. Let me speak my mind, and I'm not always right. I do the best I can. I try hard. I spend so much time reading and thinking and trying to figure out how this is all going to play out. And that's why I say I don't know how it all plays out. I just think it's looking like something really big is happening, and like much bigger than anyone is talking about. I would say don't be surprised to be surprised because I think we're on the verge of some very interesting times for the gold and silver market. But I appreciate your flexibility. I appreciate after all these years having me on every week. It's something I look forward to and look forward to picking up with you here again real soon.
I think we need to hang on to that one too. We have the "It's too stupid to be stupid" category. We're going to need the "Don't be surprised to be surprised." I love it. Okay, thank you,
It's
Andy.
true
Thank
though.
you,
I
everyone, for
mean,
being here.
these are crazy times, brother. And this is, may you live in interesting times, Chinese curse, and these are interesting times. So, anyways, I hope everyone stays well. One question I have for you, and maybe anyone out there, and put on my glasses. Did we release the JFK files today? Has anyone seen that? Because I haven't had time to look, and that's what I was going to go do this evening. Has anyone seen, has we released the JFK files? Do you know, Dunnigan? Did they?
I don't know.
Well, maybe they'll do the Jeffrey Epstein ones right after that. I'm a little more interested in seeing that one. But anyways, all right. I love you. You all stay well.
Take
And
care, everyone. Please share this
until next
video with
time.
all of those friends, coworkers, neighbors, and family members that need to hear it. Folks, a lot of people are unprotected still. We got to help each other out. Take care,
God
all.
bless.
God bless everyone and your
Thanks,
family.
Gulp. Yes, Twitter. Right on.
I get, yes, they did release them. They say.